Hello, welcome to the European Open Briefing for Monday, July the 24th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we have a bit of a risk off this morning. The dollar is extending its losses against other currencies. This comes on the back of growing uncertainty in the United States, in the White House. The focus this week, though, will be on the Fed, which starts its two-day monetary policy meeting tomorrow. Gold has risen to 4-week high on the back of the risk aversion and the weaker dollar, while the euro made fresh 23-month highs earlier today, although it is down now due to weaker than expected Eurozone PMIs, the flash PMI readings, and oil has steadied after a big drop on Friday ahead of an OPEC and non-OPEC meeting today in St. Petersburg. But let's start with the US dollar. We can see in the chart in purple the dollar index. It has fallen to a new 13-month high just at the start of trading today. Last week, of course, we had several developments, political developments. We had the collapse of the healthcare bill. We had the expansion of the Russian election probe to include Trump's business transactions, and the week ended with the resignation of the White House's press secretary Sean Spicer. So all of that is indicating a lot of uncertainty as to what could come next in the White House. It's definitely weighing on concerns that we might not see any tax reforms at all this year. The dollar yen is also down, not as much so, but it's still down. It's at a 5-week low of 110.75. But the focus will move on to the Fed this week. The two-day monetary policy meeting is on Tuesday and Wednesday. So on Wednesday, although we're not expecting any rate hike, the Fed may surprise markets by announcing the start of the balance sheet reduction plan. Although most economists do expect this announcement to be made in September, we can't rule out that the Fed may start that process early and may make that announcement as early as this week. Moving on to gold, because what's happening in the US and with the dollar has pushed gold prices to 4-week high. It hitting $1,257 an ounce. Other safe havens are a bit more mixed, though. The Swiss franc is at a 1-year high against the dollar, but at a 1-year low against the euro. The yen, though, although it is overall firmer this morning, it has been falling more recently. So despite today's gains, it is pretty much near multi-month highs against most other major currencies, particularly the euro, but also the Aussie and the Kiwi as well. And that's because the Bank of Japan appears to be lagging behind other central banks in terms of signaling policy normalization. Stocks are also down. Global stocks had been on a 10-day winning streak, but they fell on Friday, and in Asian markets, global equities were also down, and that's mainly due to the risk-off we're seeing today. Moving on to the euro did hit a fresh 2-year high of 1.1684 just earlier today. We had the ECB policy meeting last week where Mario Draghi overall sounded very dovish, but the reason why the euro shot up is because he didn't actually appear to talk down the euro. He did say that the euro's appreciation, or the repricing he called it, had received some attention, but he didn't really elaborate on that. He didn't really add anything to that other than the fact that it had come to their attention in the policy discussion meeting, but that this suggests that the European Central Bank isn't worried about the rising euro, so that pushed the euro up last week. And despite dovish words, he did confirm that they will begin discussing tapering sometime in the autumn, and most analysts still expect policy normalization to begin at the start of 2018. But we can see that euro is down at the start of European trading, but that's because we had very disappointing flash PMIs out of the Eurozone, including France and Germany. They all missed expectations, so that is weighing on the euro at the moment. We're seeing the euro drop to around 1.1638. And finally, a quick look at commodities in oil prices. We did see a rather big decline on Friday. Oil prices were down 2.5% at a 1.5-week low. This came after a report suggested that OPEC output in July will again rise compared to the previous months, and this is basically just adding to the supply glut worries. We do have an OPEC and non-OPEC meeting in St. Petersburg today. Officials have said that deeper cuts are not on the agenda, but they will be discussing Libya and Nigeria, although some other reports suggest that they won't be discussing adding Libya and Nigeria to the production quotas. So we'll see what's going to happen there. But for now, we can see U.S. crude is struggling near the 1.5-week lows at $45.65 a barrel. And looking at today's economic calendar, we can see we did have slightly a small drop in manufacturing PMI in Japan, according to the flash reading for July, but overall it remains in positive territory. Eurozone PMIs, they was sharply down, or at least well below expectations in July, so that explains why the euro is down at the moment. Later in the year session, we're going to have the US flash PMI, the manufacturing one, as well as existing home sales. That's it from me. Thank you very much for watching, and have a great day.